What's up, everyone? Welcome back. So, I mean, the market is so freaking weird right now. So, yeah, let's just jump into it. Dollar, we've been in this massive uptrend, right? This is the weekly chart, so this is a longer time frame. We had this beautiful double bottom down here, and off we went. And obviously, this caused a lot of trouble for your risk assets, including crypto. And for the most of this time, we've been going down, right? Recently, some bears are calling this the monkey rally that we had in the start of the year. The dollar actually topped out by the end of last year already. We were looking at this step by step, and when we finally broke down, consequently, the cryptos did incredibly well, as well as the stock market and whatever. But remember, this is in a very precarious macro environment. Inflation is quite high. It's now becoming quite sticky. Let's just see this. This is the next rate hike. And look down here. One day ago, it was at 24%. So this is the 50% basis point rate hike that's now poking its head out. One day ago, it was 24%. 1 week ago, it was 27%. But 1 month ago, it was 0% chance of a 50% rate hike. Now, this has increased in the past month. And you can start seeing, especially altcoins. Now, Hex is a different story. Most of them have already hit their hit highs and are now consolidating, especially your AI coins and such. All of them are kind of looking like they've topped out. Now, Hex is showing a lot of strength on the back of really good news. It's still, I believe, a buy the rumor, sell the news event. This is not the official launch, so you're not getting a copy of your coins just yet. I just think the market makers in Hex is some of the most brutal I have seen in the past. Like, these guys have been trading almost for 3 years on chain, and they're pretty professional by now. So just be careful, especially with liquidity moving around. So yeah, the macro is quite precarious. It's a little bit dangerous here. Some of the bears are definitely upping up their opinions and getting more bearish by the day. So let's just go back to the dollar. So the dollar had this rebound. We are pretty much, let's just put up some support lines. Support back here, resistance, resistance now became support. I mean, we can easily come back to the reload zone here at 109 and then continue to the downside. Overall, in the next few decades, I believe the dollar will lose its world reserve status, but it's still too early to tell. It would just be interesting if the dollar starts weak or strengthening, and everything else also goes up with it, but that's probably not going to happen. So this is the 3-month chart of the S&P. I mean, look at this wicks up here. This is a lot of selling pressure coming in. Let's go down to the weekly. Now everybody and their mother was looking at this diagonal downtrend. I mean, any which way you draw it, we've now fallen back into it. This is not even the log chart. Let's just extend that right line. So support here, or excuse me, resistance, 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 fake out, resistance for a while. We finally popped up. Now we are retesting it, right? I mean, this can easily fall back into this diagonal line. But diagonal lines, I don't really like them because you could just keep on readjusting them, right? That's still a valid there. And you've got 3 touches, right? So you can just continuously continue to readjust this. Let's look for support lines. I'm just going to put on divergences. You had lots of divergences at the top here. Some hidden. bullish divergences here, but nothing major to speak of. I mean, this looks terrible, right? Because remember, the stock market still leads crypto. Let's go down to the daily and see what's happening today. No bullish divergences really to speak of. A little bit dangerous. I mean, this is a free fall. You've broken structure. Your next support level is this 3,900 area. So you've pretty much got this low here that's defending you, but it's below all of the fib lines. So you're probably looking at the next swing low down here. And you're pretty much where the bulls will try to go long here. It's looking very weak, but either way, you still need market structure or higher lows for you to be bullish here. This is still bearish, and this will pull down pretty much everything. Let's see what the dollar is doing on the daily chart. So we had a little bit pullback. Nothing crazy. Maybe this pullback can go a little bit lower. This will obviously give reprieve for the altcoins and Bitcoin as well. But if this decides to reverse up here, down we go. Maybe we should start with the 2-year yield. The 2-year yield, this front runs the interest rate, right? We are currently sitting at 4.7. See, where's the interest rate? Let's just add the interest rate onto this chart. US interest rates. Oops. Let's put it on a new scale. So 4.75 is the current interest rate. When this, so we peaked at 4.8, which meant, and this chart has never exceeded the 2-year bond payment has never exceeded what the interest rate itself is. And when we topped out, now this is the monthly chart, let's just go to the weekly. I was celebrating back here because we topped out at 4.88. That is what the 2-year was paying you, but we didn't have enough room for another 25% basis point rate hike. Now we're looking at a 50% basis point rate hike. So this would mean they would need to take this 2-year yield all the way to 5.25. This is up here. So this, you can see, this is why this is rallying, and it's now made new highs. This will put a lot of pressure on the risk assets, because you can literally go buy bonds with cash and get paid 5%. And even the 1-year, I think, is paying even more. So cash, especially the US dollar, will then flee out of risk positions and just go sit in pretty much guaranteed safe 5% payments, which is especially in the current macro environment, hedge funds and managers will look at that and be like, and that would result in the strengthening of the dollar, because people obviously need to buy dollars to then buy bonds, right? So you will see an increase in this, and then obviously your risk assets will continue to bleed. And this is why you're seeing these weekly and daily downtrends, because of the strength of the 2-year yield. Literally free 5% on your cash. It's almost like a no-brainer. Dow Jones on the 3-month. Let's just go down to the weekly. I mean, this is a massive M. You've got a measured move all the way down to 30,400. If this breaks, right, you see it's already tested the support once. So you need a candle close below this level for it to be confirmed as a breakdown. I mean, we're literally struggling to hold on. You can see this is the opposite of good market structure. If you flip this around, you can see that it's a massive W, right? This is what we look for to upside. And I've just inverted the chart, so it looks bullish, but it's actually bearish, right? This is what it actually looks like. So everything seems to be wanting to come retest these bottom levels. This can still be bullish, right? It doesn't need to be. It starts getting bearish when you start breaking below 2,866. That would be a new low, and you would have to probably test these areas back here of the COVID dump. Yeah, so with that being said, let's jump into Bitcoin then. This is the 3-month chart. We can see support levels below us. This is technically the Wyckoff check, and we haven't really come to retest these zones, which is kind of concerning, but let's just not worry too much about that. I mean, MACD divergences on the weekly up here. Hidden bearish divergence, so very powerful. There is a massive resistance level. Everybody's talking about the 25k area. Let's just look at the monthly because the monthly closed. This is a doji candle. This previous candle in February. This is one of the worst or the least movement we've had in Bitcoin in the month of February. It was like 0.04% move. This is an indecision candle, especially after you got a massive candle like this. The next one with no follow through, just getting rejected at this level. There's a 50-week moving average, I think, or the 200-week moving average. One of the larger moving averages is acting as resistance here, the Gaussian channel, many other things. So not the best thing you might want to see. On the weekly, we have our MACD divergence. I mean, I'm looking at this Wyckoff check area, like this 18k. This would still be very bullish if we bounce off here right into the reload zone and off we go. This would look a lot like the 2015 cycle. You retest like that. That will give you this massive W here, which would carry us quite a long way, right? And that would be quite bullish and very, very healthy if we just come down and retest these areas. Daily, I mean, this market is smiling at you. You can just see the W's. Let's invert this to get rid of our biases. Yeah, I mean, this looks like it wants to rally to the upside, right? You've got your first V, and this also looks quite a lot like a Head and Shoulders. A little bit slanted. Picked the wrong one. Head and Shoulders. See, a tad bit slanted. I don't know if you can make that work, but either way. And right in resistance, right? Come down to retest these areas, and off we go. Let's see what the shorter time frame is telling us. Hidden bearish divergence is at the top. MFI has hidden bullish divergence. We're still holding structure. If we lose this area, not good. This is the total market cap without excluding BTC, right? I mean, we've just been ranging, and there is a little bit of a divergence here. We made a new high on BTC here, but this has just stayed down here. There are Mt. Gox coins seeming to be coming out. Let's see if we can find anything. Mount Gox finally starting repayments. Mount Gox creditors. Not only that, we also have the ETH release Shanghai upgrade. So this is releasing a lot of staked Ethereum, right? Why ETH selling pressure will remain low even after the Shanghai upgrades. Currently 60% staked of ETH is at a loss. I mean, this has never ever stopped people from selling, right? People sell the bottom all the time if they're underwater. That is literally psychology 101. 60% is at a loss, representing 10.3 million ETH. Typically, selling pressure arises when participants have extreme profits. That is the load of bull crap that I've ever heard. 90% of investors lose money. So yeah, anybody know when the Shanghai update is? Over 27 billion in ETH will be unlocked at the Shanghai upgrade. This means the gold rush for LSDs. This is liquid staking derivatives. Market share has begun a major competition. So that actually might be a little bit of a narrative to look for some of these liquid staking coins. What's a Pulse Lord, Pearl, Jaggy, Brigadier Rez, Captain Pulse Chain, Monkey Magic, Francis loves Jesus. What's up, dude? Raymond, always good to see you. Yeah, so a lot more bearishness coming into the market. You've got sticky inflation, the macro being a little bit precarious. You now have, I mean, Mount Gox coins. Are we going to believe this narrative? Creditors are expected to receive early repayments from the March 10 onwards. Okay. So we'll see what happens in 8 days' time. So you've got ETH unlocking, Mount Gox coin coming onto market. Yeah. The ETH unlock, I don't believe the narrative that people won't sell in losses. I mean, that's what everybody does. Plus, there's a tax incentive to sell. Okay. BTC on the 4 hourly. It is this month, right? Raymond says scheduled to take place March 23rd. We still have higher lows on the 4 hour. This was technically supposed to be a breakout, but they faked you out, which was bearish. This was the breakout level. It literally just come above it. Now they brought you right back in here. See what the RSI is doing. Just in the middle of the range. Can go either way. This is the dominance of the altcoins. Remember, when this goes up, the cryptos do poorly as more people go into stable coins. Lots of bullish divergences at the bottom here. A little bit of a volume divergence at the top. If the dollar continues to go higher and the 2-year yield continues to go higher, you would expect more and more people to flee into stable coins as well. Let's quickly see what the Nasdaq is doing. Pretty weak on the daily. I don't think it's opened up already. Market is closed. Obviously New York time. I should put this on New York. Oh, it is on New York time. 3 a.m. in the morning, so the market hasn't opened up yet. But your Forex is obviously trading. So the South African Rand versus the US dollar pretty much hit resistance. We've almost made a new all-time high. Now, this is my currency, right? Versus the dollar. This is technically a double top. Lots of divergences. Looks like we're going to have a pullback. This would mean strength in the dollar, of course. So strong rejection, double top with massive divergences on the daily. Let's look at the weekly. Lots of divergences at the top as well. I mean, yeah, we're looking at these levels, so that would mean strength in the dollar, and that would mean weakness in all of your risk assets. Now, if the dollar, no, excuse me, if the dollar is strengthening, this goes up. So it looks like this wants to go down. That would mean with the dollar weakening. So exactly the opposite that I've just said. Let's look at the euro versus the US dollar. So when this weakens, dollar has strength. Massive divergences at the top here. It's kind of weird as the South African Rand wants to increase in value, which would mean weaker dollar, but the euro wants to go down, which means stronger dollar. Let's look at the ZAR versus the euro. Weakening, weakening, weakening. So the euro is quite strong. Okay, enough of that. Let's go on to HEX. I mean, what's there to say? It's just going up. Let's load it up on this chart and see if we have divergences. So weekly divergences. I was playing a little bit with the Wyckoff distribution, accumulation, excuse me. Just remove everything. So we've had this massive bullish divergence for weeks at the bottom. We've talked that to death and we popped off out of this region. Now with this massive move that's broken all resistance, the only resistance I see that is left above us is this 8.5 cents area. Let's look at it here. We can see that we dumped down crazily when that one guy sold like all of those coins on the market. It then rebounded in the next candle, touched resistance, acted as resistance twice. I mean, it's even was resistance back here. Maybe we should extend it to see what we're seeing on the left side of the chart. Yeah, so it acted as resistance a lot here. You finally broke out. It caught the low on this wick back here before blowing off. So this is quite a significant resistance that we have there. It's also the 38.2 of this massive level. Now this is the pump chaser zone, or on the opposite, the dump chaser zone. It's kind of a little bit scary because this is where the traders will enter short to the downside to break these lows. But either way, what would be really healthy is a retest of this breakout level back here. You can see we had a little bit of traffic here. We just broke through it, never looked back, never came back to retest it or anything like that. This is your W. This is also your weekly W. If you put on the line chart, you can see this W down here. So I won't be surprised if this gets tested. If this is the sell-off that happens during the pulse chain launch itself, or maybe more delays, or a new low in the stock market and Bitcoin, perhaps we come down to retest these areas. But we need to get a retest. It's just not negotiable at all. You need to set a higher low. You just have to. Whenever that happens, at the end of the day, we're going to be moving sideways for the most of 2024. This is your accumulation here. Let's build a good base down here. And then if you're thinking that it's up only from here, I've got something to sell you. That's not how market works. If it's going to go up straight to all-time highs, it's going to come down again and retest its lows, retest its base wherever it was built. It's just the way it is. Communist coin, just moving sideways, building a good base. There was lots of supply here. A little bit high if I wanted to dollar cost average. The 1000 level is where I would be interested, but I'm not getting more of this. I've got enough. I just closed my ICOSA bar. Hedron, let's go on to the weekly. Just in this awkward middle of the range area, technically you are in value. This is where value is at. I can't fault you if you wanted to get a little bit here. The weekly RSI is slap bang in the middle. But on the shorter time frame, you could wait for the shorter time frame RS reload zone to be hit. This would be this area here. The 1700 area to the 1400 area. The daily still like above the 50% level. Your reload zones are down here. You don't really have market structure. This is a V bottom, so expect it to be tested. What I would like is a retest of these areas down here. This would reset the RSI nicely. Before going to ICOSA, let's look at Hedron versus Hex, or Hex versus Hedron pair. This is a ratio trade. Let's go down to the weekly. Very oversold. We've never been this low on the chart yet. We are coming to retest. I mean, if you do it from the wick, we have now completed the Wyckoff check. Now the Wyckoff check is the retest of the W. We've talked about this quite a lot. You are now at that area. If we put on the line chart, it can go a little bit lower. Right, you can see this beautiful W here. Let's just remove this. As we know, this is where value is at. This is where the granny investor is looking to get some. I mean, on all levels, right? But no one is interested in looking at these pairs right now. It's radio silent in the Hedron ecosystem. But this is probably not going away, right? This is a derivative of X. If it has worked in the bear market, I would expect it to at least work in the accumulation phase, and if not, thrive at least in the bull phase. I mean, this is an absolute beautiful chart. I've been looking at these things there. Now, all you need to wait for is you've got location. I mean, probably not broken the downtrend yet. This was a weird distribution top at the top here. So it's going to be a very flat diagonal line. Maybe you can use this from here. Okay, yeah, so we're riding this downtrend, so technically you just need a W on the other side of this downtrend. So it's just a fancy way of saying higher lows, right? You've pretty oversold. You now have bullish divergences at the bottom here. A few already. You see that the indicator is going higher, incredibly oversold. We've never been this oversold. If you put on the line chart, you can see price is going down, yet the indicator is going to the other side. This is starting to pay attention. So you've already got 3 reasons to take this trade. You've got the break of the downtrend, you've got oversold conditions, you've got bullish divergences. It's not played out yet though. So we need to wait a little while. The third thing, so we probably have to wait for this to create higher lows on the daily. At least you can probably look for a W on the 4 hourly, and that still hasn't played out. This is still the first V of the W. Let's get a nice bounce, higher low, and when you break this breakout level, this ratio trade is a go. That would mean your first double that you sell back into HEX would be at this area up here, 5,900, or let's just round it off to 6K. And you can see you're still still a lot of room above you. Then your second double is 1,200, and you've not even broken the all-time highs. So this is a really good ratio trade. Now, I'm not your financial advisor. You need to do your own decisions. You need to know how to set limit orders. You need to know how to manage your risk, etc., etc. And I'm not here to teach you that. You need to learn those things yourself. So let's go back to what Icosa is doing. Yeah, I mean, that chart is beautiful. So lots of bullish divergences on the 4 hourly as well. Price going lower, yet the indicators are rising. See what Icosa is telling us. We can't really say if we are in the value area because these are all new lows, right? We haven't really bottomed and made a nice range. We can probably play off that, but you're technically chasing or catching a falling knife. Just below or just above the 61.8, which is the reload zone, we can see the reaction that we've gotten off that level already twice. But you don't want to be seeing these things tested twice. It generally means that you are going to be going lower. You can see the first test here was successful, and down you go. We spent a little bit of time up here, bounced up. What you want to see is you want the higher low to be made, your W. Off you go. If that is what is a little bit concerning is I know that these indicators are a little bit high. I mean, it's in the middle of the range, so it gives it a little bit more time to go to the downside. You didn't have the most prettiest bottom down here. This was a V bottom, and like I guys always tell you guys, V bottoms like to be tested in crypto. So you could see it go all the way down here before hitting off. It's oversold, or it's not oversold yet. It can get a lot lower. Look how low we got back here. Let's look at the Icosa and HEX pair. So this is HEX trading versus Icosa. We can see this is the daily chart. Did we have divergences back here? So this closed at 27.34, 26. So these are lower, so no divergences yet. We're pretty much oversold. All right. Liquidity. It's quite a lot of liquidity. New lows. Still hasn't found its bottom. Let's see if there's anything. So lots of bullish divergences on the 4-hourly, starting to gain some strength. We would obviously need for Hex to chill a little bit here for these things to catch up. That could mean Hex going down in value, Hedron and Icosa going up versus the USDC, but I don't see that happening. It looks like they do have a little bit more downside. Yeah, so this ratio is probably going to increase both on Hedron and Icosa when Hex finally starts to dump pretty hard. And this chart is starting to tell you, these charts, that it's pretty close, right? Poor pleb. You guys know I've been wanting to get into this. It's now left the station already. This is a measured move, literally from the top to the bottom of the range that it's now created. It's just chilling here on support, but when this breaks, this has a measured move all the way to the 61.8 already at 627. I will personally put in a small percentage here, expecting it to go lower to the 450. We can see where most of the volume traded during this move, and most of it traded down here below the 78.6 level, in this range that the market made for this was a few weeks already, right? So I expect us to come down and retest these levels. This was a V bottom on the daily. It looks even worse on the higher time frames. Yeah, so once again, these V bottoms, they need to get retested. They need to create good market structure. Come into these levels, create a higher low, and there you go. So I can't be chasing up here. This is the nose loot section. I will be patiently waiting down here. I don't care that I'm not getting the best prices. This never came back to the reload zones, except if for somehow you saw that this was the bottom back here. You had no bullish divergences to tell you. Probably on the 4-hour you had some indication that it's starting to bottom. So you got incredibly oversold here. You started printing bullish divergence, excuse me, from here to here. Price is going lower. Yet the indicators are going higher. So this was, and then you had to catch this bottom somehow. Right? Or you could have said, okay, we've now bottomed on this wick, but yeah, you can't really. This was almost impossible to catch this low unless you were dollar cost averaging through it. Yeah, so poor pleb, even on the 3-day, incredibly oversold. Did we have bearish? No. So there was no really divergences, but this chart is still very early. Very oversold. Not insanely, not like 90 levels, but let it come down to these areas down here, oversold, and that will coincide with your reload zone as well. So you get nice and oversold in these areas down here. That's where I would be interested. Laddering in positions the lower it goes. Let's look at poor play versus Hex, because it's that pair, it has taken a lot of punishment already. So this is poor pleb versus Hex. You can see we're almost back inside of the reload zone. So if you were gonna swap Hex for this, you would swap Hex down here for this. You would have been selling poor pleb up here for Hex, and you would be reloading down here. Now your profit taking strategy would be selling off on a double. That's just the way the granny investor does it. Rebuying her double that she sold down here. Let's say she got in at like 1,000. She would be selling by 2K. That wasn't even the bottom, right? We got it here. Just for, and then you would have sold another double here. So you've got pretty much a free position in this coin now. by risking a little bit of X. Never risking more than 5% of your overall portfolio. This deserves like 1, 2, or at the highest 3% of your overall portfolio. And then he can rebuy at these 1000, split that sell order that he got here in 3 orders and ladder it down. And then he has more sell orders to sell. So imagine he gets in at 1,300. So the next sell order would be at 2,600. So this is a whole new sell order. It starts doubling up like crazy, right? If you got at 1,000, you'd be selling at a little above that level again. So these are all new orders working in the market, eh? And if you got at 900, if it got that low, you'd be selling at 1,800. So yeah, that's how you accumulate altcoins throughout the bear market. Yeah, so PP coming down. Texan token, I don't know if you guys want me to look at this. This is about to break out, actually. This is your breakout level up here. It's pretty hard to do a measured move of this. It's probably from below here. Next V, third V, it's quite powerful. It's probably going to work out. Measured move is there at about 3K with all those zeros. Not really oversold yet. It can go a lot higher. Bearish divergence on the stochastic though. Interesting. So Icosa versus Hedron, or Icosa versus Hex, doesn't look as good as the Icosa versus Hedron pair. Sorry, the Icosa Hex does not look as good as the Hedron Hex pair. Now we're going to look at Icosa versus Hedron to see which one of these two is more undervalued versus the other one. So if it goes up, you get more Hedron for your Icosa. If it goes down, you're getting less Hedron for your Icosa. Just looking at this chart quickly, Hedron is undervalued versus Icosa. You can pull up our fib tool. Texan token has already launched. They launched on ETH. You could have gotten a free, yeah. This is where you're swapping Icosa for Hedron. See the beautiful little W, double bottom that is formed here. So yeah, definitely that Hedron versus Hex pair does look like it's looks really good if you're into ratio trading. So are there any other coins you guys want me to take a look at? Please leave them in the... What's going on here? So this tweet, BTC bottoms after the 2-year yield tops out. Just show you guys this. Let's add the 2-year yield on here. This is a 2-year bond yield that you can get from the US government. And obviously, people will rather put risk in the US government than speculating, right? On coins or coins, stocks, whatever. Especially if you can get like, what was this right here? almost 3% guaranteed, risk-free. And you can see when this finally topped out, it was literally a month or month and a half before the market bottomed, right? I don't know if we have enough data. So it gets a little bit muddy, the water over here. The interest rates just went up here, but it's pretty low, right? Or the 2-year yield payouts was like 2%. So it's better to just speculate on the market. So the 2018 top was back here. Now look at this. We made the preliminary bottom when it topped out a few weeks ago. Now I was celebrating back here because I thought this was the top in the US 2-year. Down we go. Market bottoms a week after the top here. Now we're rallying up again. So the government is paying you almost like 5% risk-free just by buying debt from them. So does this mean we go lower now? Because this has stopped out. Remember, when this stops out, the market makes its bottom afterwards. This now has not topped out yet. And I'm seeing this go all the way to 6%, like this area up here. No, this is not aligned. It's just somewhere up here, right? Even higher than that. This orange line still has to go. Let's pull it down like this. Like there. Needs to go all the way up to that green line up there. You probably can't see it. You can. Crispy Bacon, it's a pleasure, bro. Hello, friends. Hubbub, what's up? If Texan Token has launched on ETH, does that mean no airdrop on Pulse launch? You're getting a free copy of all your coins on that side. So the coins that you have on this side, the coins that are staked, means you're getting the same copy on that side, right? It's the same as X. So if you're buying Texan Token now, you're getting it on Pulse Chain as well. So yes, you are getting a free airdrop. I hope it makes sense. Will just be copied there. Yes. What does Yak knows? Any moon math for Hex? $2 top. You can do a fib extension if this was the bottom. Let's go down to the daily or the weekly. Fib tool from the bottom. We'll just reverse it so you have the higher prices on the upside. So these are all valid targets. That is the 80 cents first, the 1.8 cents, and then the 3.4 cents. So there's your moon math. Let's put on the log chart now. The log is, you're not gonna be looking that high because it's also logarithmically squared, the prices. So yeah, your first target is the 1.618 at $4.25. Really insane, right? Now I'm saying Texan Token was given 1 million free Texan Token to Hex holders. I think I must go look. You have it in your wallet if you signed the transaction to receive it. I have mine in my wallet, so you do. You do as well if you actually claimed the free airdrop. You got 1 million. But it's not worth a lot right now. I mean, probably like $18. You didn't get yours, though I signed it. Just go under your ERC20 tokens. Let me just check here quickly. Oh, this is going to be hard to check on this screen. I have my Texan token. Yeah, it was airdropped 54 days ago. You're gonna have to look on Etherscan, right? When you're in your MetaMask, press the three dots at the top there and select View Account on Etherscan. Then you go into your tokens, that token address, token holdings. Scroll all the way to the bottom because it's alphabetic and Texan token is a T, right? And then you will see you can click on Texan token there. That will filter by token holders, will filter your address and will show you when you received it, etc., etc. Let's see how much 1 million Texan token is worth. Probably just stake it and forget about it. One, 2, 3, 1, 2, 3. Yeah, $17. Congratulations. I claimed this on a lot of accounts. Let's go to their website. I should really fix this green screen. So it doesn't capture the mic. There we go. And cut off a bit of my face, it's fine. Stake by ordered. I mean, this is literally a hex clone, right? When you stake you're locking them up endowment contract, you earn interest yield, which is programmed into the contract. The base rate is 5% annually, but can reach a maximum annual average of 87% if staked for the maximum of 22 years. Interest yield is paid in tokens. Sorry, interaction with the token. Yes, token is true DeFi. It's immutable. There are no admin keys. It's just you in the contract. For me, PP is worth $15 and TT is worth $18. Oh, for me, PP. Oh, you got the PP airdrop. Okay. Jeez, I was so confused right now. But I think I'll buy some. I'll definitely buy some PP. Texan token is a little bit overvalued here. I can't be getting it up here. I need to wait for this to top out. But I don't like supporting a hex clone. Sacrificers are definitely down in value. I mean, am I really going to stake Texan token on Ethereum with the expensive gas fees? We don't even know if they optimized the gas use. Yeah, so wherever this stops out, then you'll just have to wait in the reload zone. Can't be getting it up here. This isn't. This can just pop out of this area and down we go. Stop you out. How is Texans a hex clone? Does it have a t-shirt? I mean, we just read through it, right? I think it does have a t-shirt. They don't explicitly tell us unless we have to go through the white paper. How it works. When you stake tokens by locking them in the endowment contract, the contract rewards you with interest yield, which the smart contract is programmed to execute. The base rate is 5% annually, but can reach a maximum annual average of 8.7 if staked for 22 years. So it's got the longer pays better. Interest yield is paid in Texan token through the sole interaction with the Texan contract. Texan is true DeFi. The contract is immutable, no admin keys. Oh, nice. Just collected my Texan token on all my wallets. I didn't delete your comment. I don't know if you accidentally put in a keyword that YouTube blocks, but it just removed your comment, and it wasn't me. So you could have probably removed it yourself, and I'll leave it at that. I actually want to read the Poor Pleb manifesto as well. Okay, cool. Yeah, I'll just sit on that Texan token. Maybe send all of the coins of my different wallets to one account. I mean, you can probably then just stake it. So yeah, I think we all can agree that it is a little bit different. I mean, I don't know what the base rate for Hex is. The Texan token enables holders of things to stake their principal for a user determined time period. The stake or lockup period qualifies the stakeholder to earn yield and interest on the principal, which is earned in Texan token when the scrape function is called. So this scrape function, you can get your yield before in staking. Primary the difference of Hex token contract Texan token is that an interest scalping function which enables the stakeholder to extract the value earned from their investment at any time. That's unnecessary sell pressure. So you've removed the truth engine. The three primary opportunities: the annual base rate of 5%, an annual multiplier rewarding longer stakes. So longer pays better, right? Standard market price appreciation. So it doesn't seem like there is a bigger stake bonus. Unlike inflationary tokens, Texan tokens begins with a fixed supply and only deflates over time. Deflation of the Texan goes from penalties incurred through emergency principle. But it's not deflationary if there is inflation exceeding the deflation, right? If a staker decides to end their principal stakes early, they have served under 50% of the staking period, they are penalized 50% of the principal. I mean, we've seen these coins so many times before. They think they can improve on the Hex system, but it just doesn't work out because you don't have the community. That's the golden source, is the community. I don't want to fight anyone's bags, right? This is pure experience analysis funded, like from looking at thousands of coins across my lifetime. And just appreciate it for what it is. It's just, I'm not invested in this. I don't have a bias at all. I'm just looking at it. The only bias I probably have is because I like X so much. And it is you should be critical about these things. And I wouldn't risk more than 5% on something like this. Just basic risk management principles. Token allocation are locked within the contract with no admin site. It can be only accessed by users taking rewards. Okay. So the longer you stake, you have a multiplier. Poor pleb. I think it's pretty understandable what's going on with Tix and Token. The Plebifesto. Apparently, there is inflation in this coin. There is about Poor Pleb. Is an ERC20. It's experimental opportunity. Okay. Serves as a tool to many. Okay. Poor Pleb will work as a bridge between communities. Mutable, 100% decentralized. We will distribute free tokens only to the smallest players in the system. The token will be claimable to people who have between $1 and 1,000 token of the following tokens. The token will also be airdropped to those who sacrificed. Token will be claimable by people who have the following tokens in the address that this has probably now closed to the free claim. Okay, Plebonomics, there is a maximum. You have to probably claim it, right? There is a maximum free claim per address, no more, no less. Upon launch, there will be a 16-day, 9-day claim phase. So just no for buy. It's off. It's over. Oh, after the claim phase, Pleb will have absolutely zero inflation. Good. Okay. There are two ways to increase your token amount. One would be to purchase them on the open market once. The second one would be to sacrifice for per player. Okay. Token will be zero, utility zero. Yep. Okay, so there is no inflation. This coin. So it's practically just a meme. But I like it. I like it because Xiaomi is growing pretty quickly. Xiaomi, your friend. And he's going to continue growing and continue pumping pulse per pleb. So definitely worth getting some. Just for the ride. Just for the meme. Mr. D, thanks. Hansgrant update against moderation, countering access alive, calling for 12 and 14 in a week or so because of thin liquidity. That liquidity chart is a meme. Like, the less you have on the chart, the better. Like, the only thing I have on my chart are support and resistance lines. Or this is not even support and resistance lines. These are price targets. This is just the fib. All you need is the fib. And generally, I said this yesterday, I was taught that the market moves to liquidity. Now, thin liquidity can cause movements to both sides, to the upside and to the downside. And the market moves to the most liquidity areas. If there is a massive stop sell order, someone defending their trade, the market will move it to that person's price because, yeah, just the way it works. People can buy into that liquidity, sell into it without moving the price. It acts as a magnet. Large liquidity acts as a magnet. But I can't understand this. Like, I'm super excited. I'm 95% staked of my portfolio in Hex. Like, I'm glad that the price is going up. But I'm not saying that it's just up only forever. The market does not work like that. We're in the accumulation phase. The accumulation phase is marked with sideways movement. And if we don't get that, yeah, it's going to come down, and it's going to do it quicker. Like, you take the escalator, you take the stairs up, but you take the escalator down in markets. So let's not get too over exuberant right now. This is a classical news pump. But we printed beautiful divergences. We were very oversold. We're not going to take away from those technical indicators. And we were literally at the bottom of the range, right? So we're not going to take anything away from that. That analysis is sound. But when we broke through the Ishimoku cloud resistance, that showed you that you did have an upside move. And on top of that, then we had all of this V3 news as well. Now, this is not the official launch. I don't know if the market is interpreting it wrongly, or a lot of exuberance from the Hex community. And you then have Ivan on Tech talking about it. You have green candles, and everybody knows that retail loves green candles. Doesn't matter how high it goes, they're chasing it. Yeah, they don't look at the market the same way we do. Like, I get excited when things are cheap. Like, the retail gets excited when they see green candles. They're like, yes, it's over. And they just buy the top. And that's why I'm not calling a top yet on Hex. It can go higher. But it's not going to break all-time highs now. And I want good market structure. I want W's on the... And we don't have that yet. We have this silly small little W at the bottom here, which is good enough to push you this high. But I want us to move sideways here. This doesn't mean new lows, nothing like that. Just defend your low. There's a lot of talk on this topic. Yeah, but you can chase this, right? But then you need to hold for 3 years. At the end of the day, just having a plan and knowing what you're doing and waiting, being patient and not emotional, you will probably do pretty well. I mean, if we look at the indicators, this is, we've now not made a new high yet. So this is triple bearish divergences at the top here. This is the daily chart. You can see the RSI going lower, right? Peaks are lower. And what's the price action doing? So you see we line them up easily. This is called bearish divergence. Now it can take a long while to play out. We can look at Bitcoin on the daily. And these bearish divergences are everywhere on the chart. On the charts, on Bitcoin, on the ES, on everything. The same year, right? See the massive downtrend on the RSI all the way from back here. Price is going higher, but every time the indicators are going lower. This can play itself out by moving sideways for a long time. But this is trend exhaustion. Go back to Hex. Not only do we have that bearish divergence, we have another one from here to here. Just pull it up so we can. This one topped out at 74.83, this one at 74.21. So this again is lower. And what do we have on the chart? Another movement to the upside. And this was how I was able to call this massive divergence and this massive move that happened consequently, is we had the opposite. We had bullish divergence at the bottom with the price going down and the indicator going higher. Price going down, indicator higher. That is a divergence between the indicator and the price action, and off we go, right? You just have to wait for your W came in and you blast off there. Now on the daily, we just need a M to form, a lower high, and a break of that level. Down you go. And this would be healthy, just to fill this massive gap, this inefficiency that's now created in the market. Whatever the narrative might be, it might be the release, but the narrative always gets added afterwards, right? It's probably going to be the release of the V3 that's going to accelerate the selling. Therefore, from what you're showing and saying is the time only knows to know what really is going to happen. We're going to have a reversal pretty soon. It's probably going to be, you can wait and see, but I can pretty much forecast what is going to be happening just by looking at the charts. We can go higher, but we have divergences. This needs to correct. It needs to come down. You're oversold. But you are pretty much right. Time will tell. But all of the charts, all of the risk assets look like this. Look bearish. Look like they're exhausted at resistance. Then you have the dollar, which is kind of like between areas right now. But you have the 2-year yield, which is incredibly powerful. It's broken all-time or new highs, which means show me a high and I'll show you a buy, which means more upside. That would put strength into the dollar and weakness in the risk assets. And either you're hoping that the narrative of decorrelation is on, but we're in the bear market, and I don't see us decorrelating yet. We're not. There's still a few months left of the accumulation phase if you go off time analysis on the Bitcoin cycles. Yeah, there's still an accumulation phase to happen. This is bearish. So wait for the drops. Yeah, I mean, that is always what I'm doing. I'm just by my simple fib tool. I can't chase here, right? I need to wait for the 61.8. I'll remove everything so you can just see what I'm waiting for. I'm waiting for the green line. Anything below the green line is a buy for me. Or the red line, excuse me. But this is investing, right? You can then use these higher ones, like this is the pump chaser zone. You can chase that and make trades, but then you need to use a trading method, right? And that looks something like this. From the 38.2, you might risk, now this is your stop loss, the red area. You might risk it all the way there. And you always want to make a 2-to-1 risk to reward trade, which would mean that if you win this trade, you gain 2. If you lose, you gain 1. This is your risk 5%. You can see the percentage there at the bottom, 5.21%. And that's how a trader lives, right? And he's never allowed to risk more than 5% on any which trade. And that would mean that if he wins only 50% of his trades, he will still be in profit. 50% in profit at the end of the day. That's literally how they're doing. Printing more money will place more confusion in this space. I mean, they printed so much money during the pandemic that, yeah, this is why we have crazy inflation like we have. Yeah, so just to summarize, have a look on the 2-year yield. If it continues going higher, we have now actually have we closed? We haven't closed a daily, so this needs to close above this level in the next 12 hours. See if we have more upside. The VIX, which measures the volatility, gapped up higher today. You need, if this goes up, you have the stock market and things dumping. We're coming into a little bit of a buy zone on this, so pretty much all of your risk assets look weak. Tether dominance going up. Dollar, let's see if the dollar reverses to the upside here. That would be incredibly powerful. Did we even touch the 3-2? Yeah, we did. So this can definitely continue to the upside, to this 109 area. Yeah, so pretty bearish at the moment. Inflation is sticky. We're probably going to see a 50% basis point. That would mean that the 2-year yield still has a lot more upside to go in the next 20 days, which would put a lot of pressure on the risk asset, including the dollar going up. So yeah. Thank you guys for coming. I will see you guys in the next one. Probably, maybe later today when the market opens to see what the dollar and things are doing. Yeah, and I'll see you then. Cheers for